afternoon and welcome to Biztech's Asian Midday Market Watch. It's the 1st of December, and our guest for today, and for the first time, Glenn Yin. He's the head of research and analysis at AETOS Capital Group out of Sydney. Now, he will share his views on inflation data released this week and also focus on currencies. Glenn, welcome to the show.
Thank you for having me, Brian.
Now, Glenn, for a start, we're going to take a look at the numbers and how they stack up across the region, and then we'll get your insights. We're going to start with the Singapore Stock Exchange. The Straits Times Index is up 0.37%, but that bucks the trend. The KLCI, however, over in Malaysia is down 0.02%. Shanghai is down 0.37%. The ASX All Ordinaries is down 0.15%. The Nikkei is down 0.05%. The Hang Seng is down 0.57%. And rounding up the numbers, we've got a Kospi, which is down 0.98%. Glenn, it's a sea of red across the region, with the exception of the Singapore Stock Exchange. Tell us why.
It is a sea of red indeed, Brian. I think it's a bit of a reality check, if we want to call it. We saw that the US PCE inflation data coming out last night, which was pretty much in line with forecasts. So that sort of took out the surplus optimism in the markets. We saw that the ASX today is falling in red as well, tracing the Nasdaq, which ended in red. So I guess it's the optimism and it's the end of the week. So people are getting a bit more cautious ahead of Jerome Powell's speech in Saturday morning.
Okay, so I want to first talk about the US, and then I'm going to zoom in on Australia a little bit.
Sure.
So we've got the PCE inflation numbers. We're all anticipating the Fed speeches as well. What are some of the things that investors are looking out for in the US?
I think, like you said, Brian, the PCE inflation was very much the focus of the last trading day. And I think we are looking at, and our traders as well, very much focusing on the US dollar. We saw a healthy rebound in the dollar index, or a correction for those who are shorting the dollar after continuous decline. This is largely because of the PCE index. Like we said, is the Fed's preferred gauge for inflation. Came in line with market expectation. So I guess this feels like, given the bears, the dollar bears, a gentle reality check, a pat on the shoulder, if you like, saying the dollar, hey, we've still got some puffs left. Don't get too much ahead of yourselves. Stick to the fundamentals. And after the data release, Brian, we saw that New York Fed President John Williams also gave some neutral remarks, which I liked, saying that we are either at or very close to the peak right now, but can't rule out more hikes should this inflation stops. So I think the neutrality kept traders in a very sensible manner. We saw most US benchmark indices climbing higher. The Dow recorded a jaw-dropping 520-point jump overnight, marking its best monthly performance since July last year. And Brian, I'd like to also touch on the USD index, which measures the dollar strength against a basket of 6 other currencies. It has rebounded from the 61.8 Fibonacci retracement level, also known as the golden retracement level. So the strength at this level should not be overlooked. It is 102.550. Like you said, moving ahead, we have Fed Chair Jerome Powell to deliver his speech in early Saturday morning. So that will likely set a more assertive tone before the December Fed interest rate decision.
Now, where you're at in Australia, lots of things happening there. Focus on the Australian dollar, inflation, and of course, very importantly, next week's RBA decision. What is your expectation, particularly on the RBA decision next week?
Very good question, Brian. I think I'm personally exchanging some Australian dollar for US dollar at the moment. So I like that currency exchange rate jumping up a little bit more. Going back a few months, it was at 60 cents. It was very painful for my pocket. So I'm happy to see this going up. But the reason behind the dollar is that we saw this. I'd like to start from the inflation data we got this week. So we saw a weaker than expected inflation prints for Australia this week. Headline inflation dropping from 5.6% in September to 4.9% in October. It is the first decline in 3 months and also the biggest drop since May this year. The interesting bit is that the Aussie dollar had shown incredible resilience. Normally, a weaker inflation data is never good news for the local currency, but apparently the Aussie dollar held up the value against the dollar quite well, staying near the 66 cents region. I think the reason is that the Reserve Bank of Australia has been playing a catch-up game with the other global central banks in terms of bringing inflation back to the target range. But we're also welcoming record-breaking wave of net overseas migrants into Australia, roughly 500,000 net arrivals this year. That is incredible numbers, Brian. So the
And
demand
so this
for
is overhating a lot of things, particularly the housing market, isn't it?
it is, Brian. This we're having this rental crisis at the moment, which is a massive social issue at the moment. Lots of people that are being pushed out of the housing market or sharing little tiny spaces, which is it's a disaster, to be honest. But on the economical side, the demand for lots of items, including housing, have remained extremely strong. Historically low vacancy rates across the major capital cities, which is partly why the Australian inflation has been higher and so much harder to bring back down compared to the US, the UK, and Europe. On the other side of the spectrum, Brian, we have also seen the US dollar weakening since the BLS released the October CPI. So the direction is quite clear to me that, and market reactions are also quite rational. Now, we do have the RBA decision next Tuesday, 11:30 a.m. Australian Eastern Time. We are expecting the RBA to keep rates unchanged at 4.35%, thanks to the sharp drop in inflation. However, it is too early to rule out any further hikes at this stage, as we have mentioned, record-breaking waves of net overseas migrants, which will likely last into the coming years. So, whether 4.35% will be the terminal rate or not will largely depend on the variables. So in our view, Brian, the Aussie dollar will likely retain its strength into the first half of 2024 as interest rate and inflation differentials remain front and central for Forex traders.
Now, on that note, Glenn, thank you very much for your insights. Thanks for coming on the show.
Thank you for having me, Brian.
Now, we've been speaking to Glenn Yin, the Head of Research and Analysis at AETOS Capital Group. And this has been Biztech's Asian Midday Market Watch. I'm Brian Fernandez. Check out our show on our website, www.biztech.asia, as well as our syndication partners, TV stations, radio stations, and websites. Thanks a lot for tuning in.
Thank you.